it's Michael Saul, but everybody calls me Tiny. And this video is healthcare gets a pop. Where is it going next? This is stock market analysis for the week of June 26th, 2017. That wonderful noise you hear in the background is my new dishwasher, and I am glad to have it going. Believe me. All right. So, before we get started, if you would like to receive intra-week updates on the market from me, go to www.attackthemarkets.com, put your first name and best email address in the spaces provided, and then go to the email that you use to confirm that you want to receive information from me. This way you'll be on the list, and I will update you with any new videos or analysis of the market that I may have during the week. Let's take a look at the S&P 500 using the SPY as usual, and you can see here we didn't really go anywhere last week. We popped up on Monday, but then by the end of the week we were around where we closed the previous week. We're still holding the 20 EMA. We are consolidating up at the highs. Nothing is telling me that we have a sell signal here, okay? I still believe, I'm going to get this right out in the open here, I still believe we have a summer pullback coming. I thought it would be a sell in May and go away event. It was not. I still think we could have a pullback. I don't think we have a bear market or any of that stuff. I just believe that we are extended here. There's a lot of talk about how we're extended, and we've already broken the average for the year, and it's only the average return, percentage for the year, and it's only half the year. I just think there's a lot of excuses to take profits here. I don't see a technical reason. I know some people write me and go, well, President Trump and Trump and Trump. Okay, whatever. You know, that's more than likely not going to be the reason. Okay, it could, obviously, if something really bad pops off or something like that, but otherwise, yeah, I mean, the market looks like it's pretty strong here to me. Nothing's really telling me get out of the way, but as always, when you're up here at highs, a lot of people just, oh no, just keep buying, keep buying, keep buying. I'm not one of those people, okay? I still like to look for patterns. I still like to make sure I define my risk, and if I'm in anything, I like to trail stops to lock in gains, okay? For example, if I were to have bought this low down here in March, when it's all the way up here, I'm not just saying, screw it, I'll keep my original stop down here at 228 or I'll move to break even. No, it's gone enough where I will want to move my stop. Where would I put my stop? Maybe under the 50-day moving average in case there's a pullback to there. Maybe under a previous swing high, dependent how aggressive I was with wanting to get out if I see the first sign of trouble or giving it a little bit to catch its breath, etc. So you have to make these decisions for yourself. I do not know what your risk tolerance is. I don't know how much you're investing or anything like that. All I could do is show you the chart patterns, okay, and give you, of course, my opinion. You have to make the ultimate decision. It's your money. It's great if you understand this, and I understand that you want an expert opinion and you want somebody to tell you, but in the end, you still have to push those buttons, buy, sell, moving a stop, etc. So here's the SPY. It is coiled up here. If it releases to the upside, I think we have a shot to get to 250. If it does release to the downside, watch that 50-day moving average. Right now, gun to my head, I would say we're going to break higher because we're consolidating up at the highs. However, that's why it's not all right. That's why the game's not played on paper, as they say. We want to watch to see, which way it goes and wait for confirmation. All right, enough of that. That's the S&P 500. Here's the Russell, lagging a little bit, but still not looking terrible. No sell signal here. See if it can bust out, and maybe it'll head to 150. Mid-caps lagging a little bit more than the Russell to the main market. To the general market. I don't know, the main market. I guess they're all main markets. But anyway, this is the mid-caps, and they held the 50-day moving average. I want to see what they do, see if they can bust out and get above 325. But overall, again, not a sell signal here. The Dow I skipped over, but it looks like the S&P for the most part a little bit stronger, right? It popped up to new highs before it pulled back. But again, watch the 20 EMA. And then we got the NASDAQ. So last week I talked about the coil in the NASDAQ, and I had talked about it releasing one way or the other. It wound up releasing to the upside. A couple of down days. Thursday was a little bit. Tuesday gave back the live range from Monday, but didn't fill the gap or anything like that. But we still closed at the highs for a couple of weeks and still closed at the high of the week. All right. So now, is it all just, okay, clear sailing ahead? Not necessarily. When you have a big red candle like this, you always want to watch the 50% point, which, I mean, I could get the fib out and get it exact, but it's probably right around here where we closed the week. And to me, until this offsets, there's always in danger of this providing resistance and that us rolling back over. Again, do I think it's a bear market? No, but could we retest the 50-day moving average? Could we retest these lows? Could we even break these lows and go deeper? Absolutely. But right now, we're above the key moving averages. They're on a nice sharp angle, all of them here. So that is bullish. We're above them. We're in proper order. We have the sharp angle. To me, the NASDAQ right now, as of this instant, looks like it wants to go higher. But let's get through this ugly bar. Let's go through the indices. First off, the semiconductors. Now, remember what the NASDAQ looks like here. And when you look at the semiconductors, you're not as good. Again, is this a bearish pattern? No, it's a consolidation here. It is not a bearish continuation pattern, right? It's not like, oh, we got this big move, now we set up a continuation pattern, and now we're going lower again. We could go lower again out of this coil, but it's not a bearish continuation pattern. I got an email that says, oh, the SOX looks like it's in a bear flag. No, this is an uptrend. Bear flags do not exist in uptrends, okay? But that doesn't mean that this coil can't release to the downside to see more weakness. Again, the moving averages are nice and strong. We're in a nice trend here, so we'll see what happens if it does release to the downside and it tags the 50-day moving average. If it releases to the upside and gets back over 1100, then we want to watch this 1150 up top. Let's look at some of the stocks. Clad Tanker not acting well. Intel not acting well. Intel at a new low for the year. Okay, not really acted so well here. See what it does if it comes down to the November of last year lows here. So that's Intel. We look at like an ADI, a Micron, NVIDIA. Now, NVIDIA has a lower high. Again, that's not necessarily a sell signal, but watch to see if the weakness comes in. Watch that 20 EMA and then watch this low here and then the 50-day moving average. Banks. The banks, again, aren't on a sell signal, but looks like they've petered out. After breaking out of this consolidation, now it looks like they've petered out. Back down to the 50-day moving average here. Does it hold? Does it come back through? Does it trade down to the 200-day moving average from here? Does it hold and reverse? Again, not a sell signal per se, but I don't really have a buy signal here. Oh, it's pulled back to the 50. Buy it. Yeah, unlike the NASDAQ, like we saw on the semiconductors, where we had nice, strong moving averages showing a nice, strong trend. The not the biotechs, we'll get to that in a second. The banks are more sideways on the shorter term, right? Again, not bearish, but not a screaming, hey, look at this buy signal here. Bank of America, yeah, doesn't look so great compared to Citigroup, which looks good. Bank of New York looks okay. JP Morgan, more sideways, right? So let's go through these again. Okay, so Bank of America, in my opinion, looks the worst out of what I've shown. Again, not a sell signal, but looks the worst out of what I just went through. You got a JP Morgan, which is above these two moving averages, but also sideways. Then you got a Citigroup, which is in a bull flag, and Bank of New York, which is in a bull flag. All right, so again, a little mixed message there from the banks. Here's the broker-dealers. Broker-dealers doing a little bit better than the banks here, but also not screaming to the upside. Look at Goldman. Second close below the 200-day this year, and as a matter of fact, since, what is this, October of 16. Okay, so, but this year's second close, but now the last time it closed below the 200-day, boom, came right back above it. Let's see if it does that here, or if it's going to try to retest this low down at 210. Again, is Goldman a leader? Yeah, you could consider Goldman a bell. obviously for the brokers, but for the overall market, they're definitely a stock to watch. Now, there's a lot of strength, before I get to the biotechs, talk about the healthcare and the biotechs, there's a lot of strength in some of the NASDAQ stocks. Here's Amazon, which is trying its best to get above and stay above 1,000, even with the little whipsawing here. Let's see if it can stay above there. Here's Appalicious. Appalicious not really looking that great here comparatively. Again, is it a sell signal? Yeah, I'm not really calling it a sell signal here, but definitely not looking as strong as like an Amazon, right? How about a Netflix? Yeah, Netflix got back over the 50 and the 20. Remember, we drew this in, I believe, last week. Look how it held it. Came back up. How about Facebook? Yeah, Facebook looking strong, looking like it wants to go. How about the Alphabet, a.k.a. Goog? Okay, Googl. Google. Alphabet is the real name, but come on. It'll always be Google to me. See if it can attack 1,000 and hold it. But like a Caterpillar. So Caterpillar was looking great last week. Came back down to its 50-day moving average. Here's John Deere, also looking great. I was talking about how these can get extended, not necessarily sell signals, but trail stops, trail stops, trail stops, trail stops. And you can see this down below the 20 EMA. It's not, oh my goodness, now we're in a short signal. No, not necessarily, but these stocks don't usually move that quick. So this kind of pullback, right? You get a couple of dollar pullback. I mean, it's not the end of the world. You're not going to get, well, I don't know. I mean, depending on if you bought it at the high, then yeah, and you leverage, you could get crushed, right? But I'm just saying, usually if you're using sound money management, you got in lower, etc., it's not a crushing blow, but it's a pullback that has to be watched. Is it going to extend? Is it going to turn from here? Just pay attention to the stock like this. So I talked about biotechs a bit last week, how we were in this range, and then all of a sudden, boom, this past week, they exploded out to the upside. Nice sharp move higher. Here's the healthcare ETF, nice big move. Here's the NASDAQ, and here, the NASDAQ Bio, and here is the S&P Biotech ETF. There's some overlapping names, of course, within all of these. But anyway, nice push up to the upside here, nice impulse here. Stock I talked about last week, Sangamo, went about, 30% from the breakout. I don't even know exactly. Well, let's see. It wouldn't be 30% because that would be 2.25, and it broke at what, 750? It opened here, what, 760? It got to a high of 9.45, so that's whatever, $1.85 on that. So it's 20-something percent, 25%. I don't know. It doesn't matter. Okay, it's a nice little gain off of this. And the reason that I bring this up is, again, I don't want to divert too far off the stock market, but again, with cryptocurrencies, and it seems I have a lot of dialogue back and forth with people about, no, you're wrong, Bitcoin's the future. And all. Okay, great. Again, I am not arguing this. In my opinion, I don't believe it. I don't believe the government can't get involved. The government can always get involved. Okay, you don't have to live here anymore if you don't want them to be involved in you. And even when you don't live here, a lot of people go move to other countries and still have to pay income tax to here, right? So it's whatever. Okay, I believe the government can and will get involved. I had a discussion with somebody this week. Well, how do they trace it? I said, okay, well, how do you get your money out? Well, you get your money out from bank transfers. Well, there you go. That's how they can trace it. All right? So unless you're meeting somebody and giving them a bag of dollars in exchange for a cryptocurrency, and then when you're cashing out of them, they're meeting you and giving you a bag of dollars, a bag of money, whatever it is, okay, then it can be traced. All right, so again, I don't want to argue this again. I brought it up a couple of weeks ago, and I'm like, you know what? It's just my beliefs are my beliefs. If you're trading it and you're trading crypto, you're making money, congratulations to you. The point I'm trying to make here is that not all stocks can move like the cryptocurrencies, 25% in a week, but there are still opportunities out there in some stocks, in some of the smaller stocks, when you get nice setups where you could get a nice percentage gain like you could see sometimes in the cryptocurrencies. All right, that's what I'm saying. This is an example of that. Waited, got a nice coil, boom to the upside, whatever it is, 20-something% gain in a week. So they're out there. The potential is out there. Anyway, here's Labu, which I've talked a lot about with the list. Again, at attackthemarkets.com. Finally, it broke out of here. It came back. It retraced. It came back. It retraced. It finally broke. So this one, I believe the measured move is a little bit higher out of this break. All right. So now the question is, where are we going from here? Well, these impulses look real to me. Why? Well, they came on volume. They came out of a nice base. So what I look for here is, I'm not looking to fade these, but I am looking for a pause. I'm also not looking to chase them. I am looking for pauses here to set up, coils, flags, pennants, whatever you want to call it, and then look to position that way. All right, with an entry and a stop on the other side of it. Let's look at some of the stocks in the XLV. There are, I think, 61. I don't have my glasses. That may be an 81, whatever it is. So we can go through some of these. And I mean, here you got like a Mallinckrodt PLC. All right, now this is a specialty and generic drug manufacturer. Just started coming off $40. This doesn't look like the XLV, right? The XLV is all the way up here and had a nice impulse. But these are the kind of stocks you want to look for to see, hey, maybe you could pick up a laggard. If you're a laggard player, okay, here's Kerner Corp. Here's CNC. I'm going to just do the symbols and not just look for the names. Here's Edwards Life. And saying that, I just did the name, right? So here's ILMN. A lot of these stocks, you can go through these. Here's Baxter. Here's PKI. Look at this nice little coil up here at the highs. Again, these are stretched, so I would rather see a pullback, something like this, right, or a pause, something. I mean, this is textbook. Push, push up, pause, pivot, push up, pause, pivot, push up, pause. See if it pivots and goes. Right, here's Boston Scientific. Here's LabCorp, who I owe money to. For some reason, my insurance does not pay for my blood test, so every time I go to LabCorp, they go, yo, us money, pay us. All right, so this is a nice push to the upside here. Here's McKesson, I don't care which way you pronounce it. The symbol to me is MCK. You can look at like a Merck, too. It's a nice push-up, or a J&J. Wow. Right, here's a Pfizer. I mean, I love it. I always thought J&J was a defensive stock. Well, apparently not. It's moving not only with the market, it looks like it's outperforming here on the short term. So anyway, my opinion is the healthcare stocks, watch for them to pause / pull back, and then look for them to continue with at least one more leg. Okay? So, let's look at gold. Got a bounce off the 200-day moving average, but is more or less chopping up. I'm going to change this list to look like this. Here's oil continuing to get smacked. Coming into that July 4th seasonal high, it's already started its pullback. I think it's going down below the 2016 lows. Great. Gas is $2.11 by me, which is really nice. If it wasn't for the stupid change in the taxes, it would be under $2. All right, but that's for another day. Here are bonds continuing to creep up here. Not moving quickly, but definitely moving higher. There is a gap we can watch at 120. Where is it? At 129.71. We want to watch that up there at the in the TLT. So again, we are coiled up in the S&P 500. To me, this suggests higher prices because of where it's setting up. However, volatility trumps direction. The fact that we're in a low volatility situation in the form of a coil, we have to watch which way it releases from here. If it releases to the downside, be very careful of that 50-day moving average down here and the 240 number. If it releases to the upside, watch 246, but I think it's going to get to 250. Questions? Tiny at attackthemarkets.com. Have a great trading week. Don't forget, sign up to the list to get free intraday updates. Talk to you soon. I'm sorry, free intra-week updates. I'm not even going to edit that out. Free intra-week updates. Sign up at attackthemarkets.com. I will talk to you soon.